Well, the important thing is the NYSE says they're expecting a smooth open, and I have been speaking with the specialists, the designated market makers here, and they all tell me things are operating smoothly here. All these people here say we're set to go. So late last night, the NYSE issued a statement saying the cause of the outage was a configuration issue. That's a lot of fancy talk. It means a server or a piece of hardware wasn't set up correctly. So the likely cause was a routine software upgrade. These require changes in the software code, and sometimes those changes create problems with the messaging that goes back and forth between the NYSE and their clients. There were connectivity issues at the open, but they appear to have been resolved, and it's possible the shutdown that occurred later happened because the fix to the earlier problem caused a cascading series of new problems. We've seen this before. Now, the question I have for the NYSE is, did they follow best practices testing the upgrade in a virtual environment? And who exactly managed the performance of the upgrade? What's next? Okay, first there's a bit of damage control the NYSE needs to do. They need to go out and assure clients that the issues were a one-off event and not a major systemic problem. Second, the SEC is going to look into this and determine if the NYSE was in compliance with recent regulations that require all the exchanges to regularly update and test their systems. There's going to be a postmortem, but don't expect to hear anything for a while. They move at a glacial pace. This could take a year or more. So what have we learned from this? Well, we did learn that there is a need for a strong safety net in the event something happened. And by and large, you know what the safety net was? It was fragmentation. The NYSE's Archipelago Exchange, that's the electronic part of the NYSE, it operated as normal, as did trading on other exchanges, including NYSE-listed stocks. And guys, I heard a lot of comments yesterday that shows the floor is not necessary. I don't think it shows that at all. The floor is still very necessary, particularly on the open and the close, and ask IPO people who are down here if they think the floor is necessary. It wasn't about the floor. It was about making sure that the technology that runs anything, whether it's electronic trading system or the floor operations, operates in the most efficient and professional manner. And I think that's what we need to look at right now.
Hey YouTube fans, I'm Landon Downey from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Cramer's Mad Money, and all the latest from CNBC.